friends, this is Raman Gill at tradingwithvenus.com. Today we'll take a look at how to trade a compressed market move. Just a quick disclaimer before we get started. This is for educational purposes only. Trading is a risky business, so please be careful with your money and make sure any of these trades you are trying them out in your demo account. If you have questions about your individual trading needs, I recommend you talk to your investment advisor. So let's dive in. Here we are looking at Aussie US dollar daily chart. This over here is a compressed move. We saw that the price had dropped substantially here and then it started to rise and just kept on going. So the most important thing about a compressed move here is that the price looks like it's going higher. Price tries to push higher, but it's not really gaining much ground. So here, for example, we see that the candles here are large. They are moving up. Price is actually showing momentum here and is moving away from these levels. Whereas as we start to get into our major support and resistance area over here, price goes up, pulls back, hangs around for a while, then tries to push back up, pulls back again, tries to push back up. So this type of a behavior is called compressed move, and generally we'll tend to see compressed moves at the end of a trend. So when price has moved quite a bit, we start to see price struggle to move higher, and that's usually an indication that the price may now turn. This is a reversal pattern. Now, how do you trade a move like this? In this case, we are looking for a price to come into a strong support and resistance area first of all. That will be the first step, and then give us some sort of a reversal pattern. So once you see a double top pattern like this, what we are looking for is a nice bearish candle. So this is a nice bearish engulfing candle. Since this is a daily candle, it is a good idea to look for a bit of a pullback. So we could look for a 50% pullback, which would be right about here, 50% of this candle. So this is where our entry would be. Once the price is pulling back here, we enter the trade short. Our stop loss in this case needs to go way up there because we do have this next high which price could go to and try out. So we want to make sure our stop is far enough away that we don't get stopped out of this trade and then the price goes in our direction. Once we enter the trade here, we are looking for price to move to the next most important support and resistance area, and in this case it will be this level here. As we can see, price had a lot of trouble in this area, so this will be a good place to exit the trade. So we can just place our limit order here to exit the trade. So our entry would be on the pullback. We are looking for a nice bearish candle, look for a pullback, and then we place our limit order to exit the trade at the next important support and resistance area, which in this case will be the bottom here. So from entry to exit in this particular trade, it's 200 pips, which is $2,000 if trading one standard lot. Now, if you would like to learn more about how to look at the commitment of traders data, I'm going to be doing a webinar this weekend on that this Saturday. So you can go check out tradingwithvenus.com/webinars page and register for that webinar. Have a great trading week, and I'll see you next time.